Anyway, a few years back, I did a speech titled "Why Silver is Not Treated Like Gold" or something along that. It was a little better title than that. But the whole point of the speech was that silver had been demonetized in the late 1800s, and if silver were treated as a monetary metal, then you would have a whole different gold-silver ratio and a whole different dynamic, because gold is really an establishment metal. Now, you won't hear that on the main financial channels, but it's the "you show me, don't tell me" adage. Look, central banks have been buying gold hand over fist for quite some time, but especially the last 3 years, probably going into the fourth. And on that, I've been on many interviews. As you know, I get a few almost every week, and I'm grateful for that. But I was probably the first, I believe the first, to say the run to gold has begun. And that was around the $2,000 gold level. And I said the reason the gold run has started is because the central banks are buying in such large quantities, relentlessly. And that the run to gold starts with a very benign walk, kind of a shuffle, then a full walk, and then a brisk walk, and then a light jog, a full jog, a slow run, a fast run, and then a sprint. And that's the analogy for the run to gold, going from the stealth mode where only the smart money central banks are buying it like crazy, and the public is just ignoring it, not even aware of it. So now we've gone into probably the brisk walk phase, and the public is waking up, but they really aren't participating. So coming back to silver, if silver held the esteem that gold does within the established banking system, was treated as a monetary asset or reserve asset, it would be a different story. So that was the whole point. In that way, silver has acted that way as well, but it's rare. When we had the 2011 high, when we got around the 30 level or so, I mean, we quickly went to 50, and that was basically the paper traders got beaten for a while, a short while. Gold is a bigger asset again, widely based. And I think part of it has to do with this Fort Knox situation where we're going to go audit Fort Knox. Whether we actually do or not remains to be determined. But I think there was a scare in the market where the cover ratio for paper to physical was a mismatch. And so a lot of gold was coming in one direction to kind of fill the shelves if it was required. That's my guess. So I would lean toward the idea, yes. But I think it may be a temporary event. And I honestly think you may be asking me in the future, but I think we've topped out in gold for a little while. I think we may see this summer just kind of go sideways to down. That's kind of a minority view. It's a contrarian view within a contrarian asset, but that's the way I see it. So the idea or the fact is that Ron Paul was sitting with an ounce, a silver ounce from the movie The Silver Circle, which really was ahead of its time, in my opinion. But he showed Bernanke the silver ounce, and he said, why can't we have a parallel money system? Still on the books, still money. This used to buy, I forget the numbers, 4 gallons of gas. Now it buys more than that. Preserves your wealth. Can't we do both? And, silver's still constitutionally money. And Bernanke was really squirming. And the narrator of that, which was Brother John F., that used to run SD Bullion, commented about this as a symbolic moment. He basically said, he, not me, that this was a moment where Ron Paul had shown Bernanke what could take him down. That this was, and I added, it's like the silver bullet on the vampire. That this is something of real value, that holds its value, and that's what money is supposed to be. And that was, I think, the key point, was Ron Paul said, this is what money is. The market determines what it is. It doesn't fail like paper money does, and more or less implied, what are you going to do about it? And, the way I saw it, and I've watched it many times, Bernanke was kind of in shock and didn't know what to do. You cannot, create it out of nothing. It's not a digital world. It's a physical world, and it's a limit. And of course, you can have inflation under a hard money system. It's happened. I mean, when you get a huge gold strike, the money supply increases. I mean, the conquistadors in South America in the old days went and got all kinds of silver, and it caused inflation. So an increase in the money supply is the true definition. But overall, in the long term, there's nothing that really works as well as a bimetallic standard. And this is why silver is really important for a hard money standard. I'm going to digress a moment, but there's a paper out called Gold Standard equals Fiat in disguise.
Mm-hmm.
And this gentleman talks about a gold-only standard always immersed into fiat only. And there's no limit on a gold-only standard once it flips to fiat or a fiat equivalent. How many dollars does it take to buy an ounce of gold? Go back to 1913. Silver's demonetized officially in 1873. So in 1913, it was $20.67 the ounce. Now it's almost $3,500 the ounce. What happened? If it's a constant, the dollar paper would be the same amount today. Gold would be the constant, but it's not. Gold, the metal is constant, but the paper deteriorates over and over and over again. And that's the path we're on. And we're going to get to the end of that game here in the near future, in my opinion. Now, an exponential function, for quick example, is the checkerboard that most kids learn about in grade school. If you put a penny on the first square, 2 the next, 4 the next, 8 the next, 16, that's an exponential function. It's 2 squared. And so when you get into the final phases of the great inflations, they do go exponential. Not necessarily by that factor, but they do go exponential. So it goes to 2 and then the 4 and then the 10 and on it goes. So once the market recognizes that in a big way, then you'll see the bond market deteriorate. And that's the key to the whole thing. A debt-based monetary system is based on debt, and that debt has to be trusted, or it has to be a confidence factor. And we're taught over and over again that the most stable place to put your money is in the United States Treasury market, which is the debt market, which is really unstable in a fiat money system. They always fail, or they always have. So my contention is that this one is destined to fail, but before we get to that quote-unquote failure, we'll have a new system imposed upon us in a variety of ways.
How will the new system be ushered in, David?
I'm not sure, but for a quick scenario, we could have some kind of a financial crisis, shut down the banks like in the 30s for a couple of days, come up with a central bank digital currency, go into your bank, get your retina scanned, get in a new system. And by the way, for everybody that's lost their job or whatever, we've got a universal basic income. And all you have to do is sign up and jump on board the new system. And the new system, they can basically wipe the slate clean, blame it on cyber warfare, and they don't know who attacked the banking system. So sorry, but we're going to make it good. We'll kiss you and make up and move on. And that's a scenario. I don't know, but that's an outline. You asked the question, that's an answer. Well, my speech in New Orleans at the Gold Show last year was the new monetary system, and I took it from the top down because I think that's the best way to analyze any market. I analyze silver from the top down. And from the top down, you look at the BIS, the Bank of International Settlements, the Banker's Bank, and what their rule book is. And I basically took everything off their website and kind of, hate the word dumbed it down, but I did try to make it very clear in layman's terms and went through slide by slide what they said they're going to do. And basically it's what I outlined. It didn't say how they're going to get there, but it did say they're going to get there. I'm not trying to be cute, but yes, until it doesn't work. I mean, it's what Jim Dines used to call a race to the bottom, competing currency devaluations. All the other nations are trying to devalue against the dollar so they get an export advantage, and we're buying their goods, or whomever's going to buy their goods because it's cheaper. And then the dollar, the reserve currency says, oh, wait a minute, we're not exporting enough. We want to solve the balance of trade payment problem, and we're going to lower the value of the dollar so we get an export advantage. And so it's back and forth until you get to where? Zero? I mean, when the dollar has no value, we're not going to do that. We're not going to hit that. But what we do is, repeating slightly, we could see a reset of some type that changes the whole system.